Hi guys, today I'm going to try and explain what CFD trading is. Now, CFD stands for Contracts for Difference, and trading CFDs allows you to speculate whether an asset's price will go up or down and for you to profit or loss from the price that you open a trade at to the price that you close at. Now, you never actually own a share, which can also make it cost effective. But remember, you're not buying a share, you're just speculating on the price movement. So for the purpose of this video, we're going to use Trading 212 simply because of its easy to read format. I use this platform in a lot of my beginner videos. It's a great platform if you're just starting out. I'll put a link to it in the description below. Also put the balance on the demo account at £200. It's a good starting place for people that haven't got a lot and they want to get into trading. So we're going to use Tesla as an example. Now, each asset, whether it be stocks, commodities or currency pairs, has a buy or sell price, as you can see. Some people refer to the buy price as the bid, and some people refer to the sell price as the ask. So I'll say again, remember this is just speculation of price, so you're not actually buying or selling the asset. This will just be the price that you'll enter in at when you open your trade. So if you think the price will rise, you buy at the bid price. And if you think the price will sell, you'll sell at the ask price. You will always open the trade with a slight loss because of the spread, which is the price difference between the buy and sell. This is a small amount where the platform usually makes their money. So if we place a buy of say 0.1, because you don't have to buy the full value of a share as it's CFD. So we'll get that in there, 0.1 and buy. So now if we go to the pie chart looking thing in the bottom here, you can now see that you will profit and loss from slight changes in price. Notice your balance, it's changing with the trade, or it should do. This is demo account and it's the weekend and it's very slow. But you should never commit your whole balance to a trade, as you should always leave enough in the account to cover your margin, which is basically a float of money to keep your trade open. If it starts losing too much money and your balance gets too low, you'll get a margin call to add more funds. As long as you keep the size you trade relative to your balance, you shouldn't have a problem. So now you can press on your balance and it will come up with a helpful chart so you can keep track, which is here. The block funds down here is basically a collateral in case you blow your account. People can do that by opening trades that are too big for their account to handle and the price moves down too quickly for them to put more money in, therefore blowing the account. CFD accounts are also leveraged. Depending on what your platform offers, as standard the leverage can vary. Trading 212 standard accounts are leveraged around 1 to 30 ratio, I think, and up to 1 to 500 for a professional account. This means that for a deposit of £100, if your broker gave you a leverage of 1 to 100 ratio, you would have the trading power of £10,000. This gives you potential for bigger profits or losses with a small balance. But remember that your balance will still only be £100. And if you open a trade with the full buying power that you have, then the balance could soon disappear with a small move in the market. So just make sure to always check the amount you're buying and selling and use stop losses. So bearing in mind we have around £200 in our balance right now. If we type in a crazy large figure and buy, it'll tell us what our maximum is that we can buy, so 6.5. Now bearing in mind we have 200 in our account, we've got the buying power to open a position that would be worth 6.5 shares in Tesla. So if we do that now and see what happens, as you can see, it's barely moved yet and it's already taken off just for the spread. Just from the spread of Tesla, it's took it down £7.71 for a spread of 1.5 near enough. So if that moved maybe 10, that could be a lot of money that you'd lose off your balance. And as you can see, we're already getting a margin call. If that goes past the margin call and hits that positions will close line, it will close all of your positions for you automatically. So you don't want that to happen. So just bear in mind when trading what position sizes using that sort of thing. Okay, guys, I think I covered the main points to at least start looking into trading with a CFD account. When you do, remember to look at my risk management video. You should always use stop losses and stick to your risk per trade plan. I might look into doing another risk management video to help you guys out. We'll see. Go into a bit more detail about it. Yeah, so that's it from me today. Please hit the like and subscribe button. That's really greatly appreciated. And if you have anything specific that you want to see in the next video, please give me a comment down below. Thanks again, guys. I'll see you next time.